Welcome to this video about student finance for 2026-27 entry. These are the most up-to-date figures we have at the moment, and the information applies to full-time UK undergraduates. There are two main costs when you go to university, the first being the tuition fee, the cost of your course per year. You can apply for a loan called the tuition fee loan, which will cover the cost of that, and we'll have a look at that in more detail in just a second. The second set of costs you will have will be your living costs, so things like your rent, your food, travel, social life, books. You can apply for another loan called the maintenance loan. You'll probably find this doesn't cover everything you need it to. We'll have a look at it in a second. So you might want to look into extra funding available, getting a part-time job at university, looking into scholarships and bursaries, and then support from caregivers as well. Tuition fees for 26-27 will be £9,790. For next year of entry, 2027-28 entry, it will rise to £10,050. You do not have to pay any tuition fees up front. A tuition fee loan does not depend on household income, so it's not means tested. A tuition fee loan covers the full cost of your course per year. So if it costs £10,050 per year, you would get £10,050 per year. Student finance pays the tuition fee loan directly to the university when you enrol, so that money will never be in your bank account, you can't accidentally spend it, and the loan is repayable but only when your income is over £25,000 a year, and we will look at repayments in more detail later on. The way that the maintenance loan works is a little bit different because the amount you will receive depends on where you live and study and your assessed household income, so it is means tested. For this year of entry, 2026-27 entry, a maximum maintenance loan of £10,830 is available. The maintenance loan is paid directly into your bank account, so you do need to have good budgeting skills. The loan is repayable, but again, we'll look at repayments later on. In the table, you can see the maximum maintenance loan amounts available for this year of entry. The higher the household income, the less support somebody would be eligible for. So the maximum amounts are for households that have an income of £25,000 and under. Somebody who lives with parents will get slightly less than somebody who moves away and studies outside of London. And then somebody that studies in London and is moving away from living with parents will get a chunk more because London is so expensive to live in. And then there's also a different amount available for those who live and study abroad for at least one term as part of their UK course. The household income means the income of any parents, step-parent, parents, partner, wife, husband or civil partner you usually live with. And as I say, the higher the household income, the less support you would be eligible for, but there is a minimum amount available. So everybody is entitled to something. So as we saw on the previous slide about what student finance classes as household income, so for typical students would be parent income, but for some students that doesn't apply, and you can be assessed as an independent if you fit into any of the categories on screen. So for example, if you're estranged from your parents or you're a care leaver, you've no living parents, you can apply with your household income instead. If we look at this maintenance support example, so you can see how it differs because you will get something different to your classmates, to your friends. So this person, they live with parents. They will be studying outside of London and moving away. So let's say they're coming to the University of Reading. The household income here is £70,000. So they would be awarded an amount of £4,915. In this second example, this student, again, they live with a parent, but when they come to university, they'll be studying outside of London and will be moving away. So let's say they're coming to the University of Reading. The household income here is lower than the previous slide. So here it's £35,000. So they will be awarded more and they will get £9,038. In this example, this student, they don't live with parents. They will be assessed as an independent student. So they are estranged, let's say. They again will be coming to the University of Reading. Their household income will be zero, so they will get the full amount available of £10,830. Tuition fee loans, as I said at the beginning, are paid directly to the institution when you enrol. The maintenance loan, any grants, bursaries and scholarships you apply for are paid directly to you. So budgeting, super important. The core student finance, so your maintenance loan, is paid in 3 large lump sums throughout the academic year. The first is triggered by enrolment, so around September, October, the second after Christmas, and the third around the Easter time. So it's really important that when you get your letter of entitlement, it will have those dates of payment on there. Put those in your calendar so you can work out how many weeks between payment, divide the large lump sum by the amount of weeks, so you've got your weekly budget. But also, if on the date that you are expecting the payment, if it hasn't made its way into your bank account, then you know that it's time to chase student finance and see what's happened. There is extra funding available as well, which is non-repayable. So for students who have children or an adult who is dependent on them, there's extra cash available there. For students who have a disability, long-term health condition, mental health condition, or specific learning difficulty, you can apply for something called the Disabled Students Allowance, which can provide additional cash to help support you in your studies. If you study overseas as part of your UK-based course, or if you undertake a medical or dental clinical placement, there's additional cash. There are bursaries for certain professions, some teacher training subjects, some NHS courses, social work. And if you are leaving local authority care, you can access something called the Higher Education Bursary. Your support worker, key worker should tell you about this, but if they haven't, then chase them up about that. It's worth up to £2,000. Every single year, there are pots of money for scholarships and bursaries that go unspent because students don't know about them, they aren't applying for them. So do have a look into scholarships and bursaries. It's free cash, non-repayable. They are granted not just by universities, but by businesses, charities. So have a look, see what's out there. They could be granted because of academic achievement. They could be subject specific. It could be because of low household income. It could be tied to certain professions. And there are lots of ways that it could be implemented. So universities might give you money off accommodation, a reduction in tuition fees either for 1 year or the duration of your course, cash awards, combination. They might have vouchers for you to buy books for your course. They might pay for your cap and gown in your final year for graduation. There are lots and lots of ways that universities will want to support students financially. So have a look on their websites, but as I say, also have a look online at charities, businesses, see what's out there. The UCAS website has a funding hub that you can have a look at as well. When you apply for student finance, you apply in the year that you are going. So if you are in year 12 at the moment or first year of college, you wouldn't apply until next March. If you're going to university this year, you should have already applied for your student finance. Applications typically open around March and the deadline is usually mid-May. You will need to have ready your valid UK passport details or your birth or adoption certificate or other identity and residency evidence documents, your national insurance number, your UK bank account details, and it doesn't need to be a student bank account at this point, you can update those details later on, and university and course details, but you just need to use your preferred choice. At the time of applications opening for student finance, you might not have had all of your offers back and you might not have made your firm and insurance choices. That doesn't matter. You just need to use your favourite out of the places you've applied for, and you can update that later on in your online account. The most important things that they are checking for are your eligibility, which is why they need passport details or other residency evidence documents, and your national insurance number and your household income. The rest of it, you can just update those later on. It's easy to apply online and it only takes around 30 minutes. You apply at gov.uk/student-finance. For parents that are supporting a student finance application, they would be emailed a link within 24 hours where they create an online account, and that's where they provide information about their income from the previous tax year. So for this year of entry, the previous tax year would be 24-25. If the income for the tax year, the current tax year, will be at least 15% less than the previous tax year, they can give income details for the current tax year instead. Parents will also need their national insurance numbers, details of their household's taxable income and their personal taxable income, and details of other child dependents. HMRC check that information and they might ask for further evidence of the income if it doesn't match their records and of the marital status. Do apply early. So when it is your time to apply for student finance, make sure you are looking out for when applications open. You can sign up to the student finance campaign to be alerted and apply before the deadline. That means that your money would be guaranteed to be in place for when you start your course. It takes at least 6 weeks to process a new application. Again, you apply online at gov.uk/student-finance. You don't need a confirmed place at university or college to apply, so do not wait to have all of your offers back. Do not wait to make your firm and insurance choices. Just apply with your favourite university and you can just update that later on. If you end up going through clearing and you end up going to a different university after results day, you can update it then as well. If you're on the fence about taking a gap year, you're not sure, still apply for student finance just in case you don't take the gap year and you don't defer your entry to university, so that money can be in place if you need it, and if you don't, you can just cancel it over the summer. Make sure any evidence and information needed to support your application is supplied right first time, and read, understand and agree to the loan terms and conditions. You will be on Plan 5 repayment, so have a look for that information when you are looking at repayment information online. Plan 5 repayments start from the April after graduating or leaving university. So you graduate in the summer, you get your year's tax grace. If by the next April you are earning above the threshold, which at the moment is £25,000, you would start to make small repayments back. You repay 9% of your income above the threshold. Deductions are made from your pay through the HMRC tax system, so through your pay slip. If your income falls below the threshold, those repayments would stop, and any outstanding loan balance is written off 40 years after entering repayment. So what does that look like? The higher your salary, the higher your income, the higher the monthly repayments would be. If we look at the example on the screen, you've had your year's tax grace after graduating, your income at some point is above the threshold, £28,000, 9% is deducted from £3,000, so not your entire income, just the difference between the threshold and your income. And your monthly repayment works out to £22.50 a month. On your payslip, there will be other deductions made: pension, tax, national insurance. Those would usually be triple figures or close to, and then your student loan repayment, £22.50. There is interest applied, and you can have a look at slc.co.uk/repayment. We recommend getting money ready for university. So as I said at the beginning, budgeting really important when you're at university, but also in life in general. So it's a good skill to have and a good skill to enhance when we can. If you go to blackbullion.com, they have a funding hub, so you can have a look at scholarships, bursaries and grants. They have financial well-being pages, so you can, get really good with finances and things like that if you're not sure how it all works. And they also have a student budgeting app that you can download, which again, really handy. Take control of your money management. So recap. It's important to make the right university and course choice. You get the length of your course plus 1 year as a buffer, minus previous years of study. So if you've studied somewhere for a few years and then you think, oh, actually, I want to start somewhere else, you've used up some of your funding already. Go to open days, ask questions. There's no such thing as a silly question. Get in touch with the universities that you're interested in and make sure that when you do go, you are making an informed choice about the course that you're applying to and the university that you're going to as well. We can only make a best guess. So just as long as you've done lots and lots of research and you're happy with where you're going, then you're using your funding in the right way. Tuition fee loans are available to all eligible students. If your course costs X amount, you will get X amount and that will be covered. Future repayments are linked to your income and not what is owed. If student A borrowed £50,000, student B borrowed £30,000, they've left university at the same time, they've had their year's tax grace, their income is the same, those repayments would also be exactly the same. It doesn't matter that one borrowed more than the other. Research all the finance available, especially those bursaries and scholarships and the other free pots of money. Apply online and on time, so when the time comes and you're going to university, do apply for your student finance before the deadline and do not wait for a confirmed place at university. Don't wait for your offers to come back. Don't wait to make your firm and insurance choices. And do check all of your details are correct before submitting your application. So a few useful links. This is what the gov.uk/student-finance page looks like. All of the information covered in this video and more detail is on there so you can read about it, and this is where you will apply for your student finance as well. This is what the student finance calculator page looks like. So you can pop in your details in here and then it gives you the estimate of what you would be eligible for, which is really handy for when you're planning and looking at places where to live, your accommodation, do you need to go for a shared bathroom rather than an ensuite? You can follow them on social media for handy updates and you can contact them on there too. Thank you for listening. We hope that's been useful. If you have any questions, you can contact us at outreach@reading.ac.uk.